Welcome, everyone, to this deep dive. Today, we're digging into some pretty big topics in business and economics.
That's right. We'll be looking closely at Tesla, what's happening with tariffs, and U.S. manufacturing, and, of course, the Federal Reserve.
And our guide for this is a recent discussion from YouTube featuring Larry Goldberg and Randy Kirk. Lots of ground to cover.
Absolutely. And what's really striking is how these things connect. Tesla's moves, trade policy shifts, central bank decisions. It's all intertwined.
Exactly. So our mission here is to, well, cut through the noise, pull out the key insights, and help make sense of it all for you. Consider it your shortcut to understanding these developments.
Sounds good. Where should we start? Tesla.
Yeah, let's dive into Tesla. What were the immediate observations?
Okay, so on the day of the recording, which was Wednesday, May 7th, Tesla's stock pretty much just mirrored the NASDAQ.
Right, followed the market's beta, as they say.
Exactly. And Larry Goldberg pointed out this wasn't like a huge surprise.
Okay.
It seemed to fit with the kind of consolidation people were expecting.
So for you listening, this might mean Tesla stock could be maybe a bit less volatile for a period, more stable perhaps for long-term folks.
Potentially, yeah. Less of the dramatic daily swings, maybe focusing more on underlying value.
Got it. And there was also mention of Lara Trump visiting a Tesla factory.
Yes, she toured a facility, talked to employees, and the feedback reported was, well, really positive.
Consistent with what we've heard before.
Pretty much. Good working conditions, strong teams, people believing in the mission. It seemed to be a recurring theme from inside the company.
Interesting. And how does Elon Musk himself fit into this picture right now?
Well, the feeling discussed was that his increased focus on Tesla, maybe after spending some time on, Doge and other things, is seen as a good thing by investors.
Right. Less divided attention, perhaps.
Yeah, that seems to be the sentiment, that his focus could drive Tesla's core business forward. But they also noted that people who already have strong political feelings against Musk probably aren't going to change their minds just because he's focusing more on Tesla. Perceptions can be sticky.
True. It really shows how much scrutiny these big companies and their leaders are under from all sides.
Definitely.
Now, looking forward, there's buzz about a new Tesla around June 1st. What's that about?
Yeah, there's definitely anticipation. What exactly this new Tesla involves isn't clear, though.
So, speculation time. New tech, new strategy.
Could be anything, really. New models, maybe a different approach to the market, how they roll it out, the tactics. That's what people are watching.
Okay. Let's shift gears slightly. Palmer Luckey came up in the discussion.
Ah, yes. The VR guy, now heavily into defense tech. He talked about his new drone facility in Ohio. $1 billion investment.
And he had some strong words about drone warfare.
Very strong. Called it an existential threat.
And that urgency seems to be behind this super fast 15-month timeline to get the facility producing drones.
15 months sounds incredibly ambitious for something like that. It really does. It highlights just how quickly this area of technology is moving and, the perceived need for it.
But there was a catch, wasn't there, about the timeline?
Well, yeah. The point was made that the facility was actually already under construction when he gave that interview.
Oh, okay. So the 15 months. Maybe it's from the interview date or until full capacity, not from groundbreaking.
Exactly. Bit of nuance there. It could mean 15 months until they're hitting full production targets, not just building the shell. Worth keeping in mind.
And connecting back to Musk, there was a mention of a potential partnership.
Yes, between Musk's companies, like SpaceX perhaps, and Palmer Luckey's venture.
On what?
Taking over a project for modernized, robotized jet fighters. Apparently, Boeing had some issues delivering on it.
Wow, that's quite a team-up. Private sector tech minds tackling advanced military hardware.
It definitely points towards a trend, leveraging that kind of innovation for defense applications. AI, robotics, it's all becoming relevant.
Okay, let's swing back to Tesla, specifically sales numbers. There seemed to be some nervousness among traders about short-term unit sales.
Yeah, definitely. Looking at different regions, there are some potential headwinds.
Like in Europe?
In Europe, yeah. Sales might soften a bit. Reasons cited were the new Model Y not being fully available everywhere yet, some political stuff, and just the general economic situation over there.
Okay. And the U.S., different story.
A bit more complicated, maybe. They discussed how there was that earlier spike in buying, maybe driven by people trying to get in before potential tariff impact.
Right, pulling demand forward.
Kind of. So now you might see a natural dip after that. Plus, they mentioned this idea of a democratic push against Tesla.
Political factors again.
Yeah, though they also floated the idea that maybe conservative buyers can step in and offset some of that. And, there's still apparently pent-up demand for the Model Y.
Yep.
So lots of cross-currents.
Definitely a mixed bag. What about China? That's a huge market for them.
Crucial market. The current numbers are apparently good, looking strong, but there are risks.
Such as?
Potential recession there, maybe some social unrest, general uncertainty, and also possibly some anti-American sentiment bubbling up because of the whole tariff situation.
Right. The trade tensions could easily spill over. So good now, but keep an eye on it.
Absolutely. Any major issues in China would definitely impact Tesla's bottom line. It adds that layer of unpredictability.
Okay, let's talk robotaxis. The launch is expected soon, right? What's the feeling about how it will go down?
The expectation seems to be, fairly low-key initially.
Not a giant splashy event.
Probably not. Think dozens of vehicles, starting out thousands. A cautious rollout.
Makes sense. Test the waters, work out the kinks.
Exactly. And it manages expectations. Plus, if there are early issues which, let's be honest, are possible with brand new tech like this, smaller launch limits the negative press.
Good point. They also mentioned seeing early production models of the, cyber-capable vehicles, like the Cybercab?
Yeah, expected by the end of this quarter. So the hardware seems to be moving along, even if the initial service launch is small scale.
What does cyber-capable even mean? Just Cybertruck-inspired design?
That's probably the gist of it, yeah. Robustness, advanced tech, maybe some shared design language.
Interesting. There was disagreement, though, on the launch event itself, right? Big party versus quiet affair.
Yeah, contrasting views. One side pictured, dignitaries, fanfare, a big public celebration.
And the other?
The other predicted something more internal, maybe closed door.
Yeah.
Based on how Musk launched things like the Cybertruck or Starlink. More focused on the tech reveal, less on the spectacle.
His style is often less traditional, that's true.
So, we'll see. But regardless of the party, the initial riders are likely to be
Tesla employees, people in Austin.
pretty much employees, folks from supporting companies, local residents. It creates a sort of controlled beta test group.
Get that real-world feedback before opening it up wide. Smart.
A practical way to start.
Okay, let's pivot now. Tariffs. The discussion mentioned a shocking increase in business for some U.S. manufacturers. Is this really happening?
Well, according to the sources they cited, yes. They referenced a Wall Street Journal article, interviews with companies like Whirlpool.
Okay.
And others. They're apparently adding production lines, adding shifts, hiring more people.
Because of the tariffs?
That's the claim. They're seeing former customers who maybe went overseas now coming back and wanting to buy domestically again.
That's significant if it's widespread, but there's always a but.
Always. The big challenge highlighted was sourcing parts.
Ah, the supply chain issue.
Exactly. A lot of components still come from China. So even if you have orders for the final product, if you can't get the necessary bits and pieces domestically, it's hard to ramp up production quickly. It's a bottleneck.
So the demand is there, but the domestic supply chain needs to catch up.
That seems to be the issue. It does create an opportunity, though.
For U.S. component makers, raw material suppliers.
Precisely. If they can step up and fill those gaps, it could really boost those supporting industries here.
It's just China's manufacturing ecosystem is so developed, right? Especially for components.
Immensely so. They emphasize that.
Yeah.
Even if labor costs aren't the huge advantage they once were, the scale, the infrastructure, the know-how for making all those little parts, the U.S. just doesn't have that depth anymore in many areas.
Hard to rebuild quickly.
Very hard. Randy Kirk shared an anecdote, I think from his old plastics business during COVID, about how companies were scrambling desperately to find any domestic suppliers when the China supply chain got hit.
Shows the dependence. Any other examples?
They mentioned a plastic glove maker firing up old, dormant production lines, and Whirlpool apparently found some workarounds sourcing things from Bulgaria, interestingly enough.
So companies are adapting, finding ways.
They are, but, and this is important, the experts cautioned against reading too much into just these positive stories, meaning these successful manufacturers might be outliers. The overall economic picture might still be challenging for many, despite these bright spots. We need to see the bigger picture.
Right. Avoid confirmation bias based on a few anecdotes. What about the broader economy, services sector?
Yeah, they touched on the ISM and S&P reports for services. The ISM showed good expansion. New orders were better than expected, though maybe not described as super strong.
Okay. Solid, but not booming.
Kind of. The S&P report also showed continued expansion, but maybe easing off slightly. So the services side of the economy, which is huge, is still growing, but perhaps the pace is moderating a little.
Got it. Okay, that leads us nicely to the Federal Reserve. Big decision coming up Wednesday. What's the chatter?
Well, the market odds are pretty low for an actual interest rate cut this time around.
So likely hold steady.
That's the general expectation, yeah. Hold rates where they are.
But there was an argument made for a cut, wasn't there?
Yes. A sort of steady the ship argument, like maybe cut by a quarter point, just to provide some stability, especially with all this uncertainty around tariffs and their potential impact.
Even if the Fed chair isn't politically aligned with the current administration.
That was part of the discussion, yeah.
Yeah.
The whole dynamic of Fed independence versus political context is always there.
And wasn't there a technical justification mentioned? Something about inflation.
Oh, right. That was key. 2 straight months of zero core inflation.
Zero. Yeah.
Technically, based on that data point alone, you could argue a rate cut is justified. The thing they were trying to fight, inflation, seems to be cooling significantly, at least by that measure.
So the data might support a cut, even if the market isn't expecting one.
Exactly. It presents an interesting tension.
And if they don't cut rates, what else might they do?
They could offer dovish guidance, signaling through their statement or the press conference that they're leaning more towards potential cuts in the future, or are more concerned about growth than inflation right now. Softening the tone, essentially.
Influencing expectations without actually changing policy yet.
Precisely. It's a tool they can use.
What about the bond market? How's it reacting to all this?
Well, it initially sold off a bit after that ISM services report came out.
Thinking stronger economy means rates stay high.
Probably. But then it recovered slightly. Yield settled around 4.35%, which is still relatively high.
And there's still that issue of bond supply.
Yeah, ongoing oversupply seems to be a factor. And there's another bond sale expected this week, which could add more pressure. So the bond market is definitely juggling a few things.
Okay, let's do a quick run-through of commodities and other markets. Oil.
Oil prices dipped down to around $57 a barrel.
Why the drop?
Reportedly because Saudi Arabia boosted production again in June, after already increasing it in May.
More supply equals lower prices. Good for inflation, maybe.
Generally, yeah. Lower energy costs help cool inflation. Probably not what the oil producers love to see, though.
Fair point. Natural gas.
Natural gas actually went up by about 65 cents. The potential reason mentioned was colder than usual weather in May, boosting demand.
Sometimes it's just the weather. Gold.
Gold climbed back up into the $3,341 range, which, prompts the question, will it try to push towards $3,500 again?
Always the safe haven bet in uncertain times. Silver.
Silver was up too, getting close to $33. But the take was that silver is, way more unpredictable than gold.
How so?
More volatile. Kind of a plaything of crazy people was the phrase used, I think. Less reliable is just a safe haven, more speculative maybe.
Okay. Copper. Dollar.
Copper was flat, around 4.67 cents. The dollar didn't move much either. It's pretty stable.
And Bitcoin. Always a wild ride.
Tell me about it. Had a big drop apparently, but then recovered quite a bit, back towards $95,000.
So the bulls are feeling good about that bounce?
They likely see it as a sign of resilience, yeah. A significant moment for them.
Okay. And wrapping up the markets, pre-market equities. How are things looking?
Pretty flat, really. NASDAQ yield down just a tiny bit, S&P down slightly, maybe up a fraction. Suggests markets might just tread water until the Fed announcement.
Waiting for direction. What about the VIX, the volatility index?
VIX was down around 23. Some people read that as bullish, lower expected volatility, less fear in the market.
Interesting. Okay, so after all that, what was the final word of wisdom?
Simple, really. Be very cautious.
In this market.
Yeah. The feeling was that it's a potentially dangerous, uncertain environment right now. So caution is advised. Prudent advice, I'd say.
Makes sense. Well, that wraps up our deep dive for today. We've covered a lot: Tesla's twists and turns, the real-world effects of tariffs starting to show, and what everyone's watching for from the Fed.
It really underscores how all these pieces fit together, doesn't it? You can't really look at one in isolation. Understanding the connections is key.
Absolutely. Which leads us to our final thought for you, the listener. Thinking about everything we've unpacked, the tech shifts with Tesla and drones, the trade policy impacts, the Fed's balancing act, what single factor do you believe will have the biggest impact on the economy over the next 6 months?
That's a tough one. Lots to weigh up.
It is. Definitely something to chew on. Thanks for joining us on this deep dive.